Hello, and welcome back to Mr. B Teaches History. Today's lecture will focus on the causes of the Great Depression and what happened as a result of it. So let's get started. The event that kicks off the Great Depression is the stock market crash of Tuesday, the 29th of October, 1929. The previous 18 months' prices in the stock market kept going up and up with little end in sight. A few weeks before the final crash, prices had fluctuated, but starting on October 24th, there was a huge volume of trading that causes the prices to plummet. Several banks bought millions of dollars of stocks to keep it afloat for a day. The sell-off continued on Monday, and the boom fell out by Tuesday when millions of investors ordered their brokers to sell, but no one could find any buyers. The Dow Jones Industrial Average went from its high to 381 points to 198 and down to 41 3 years later. There are a large number of causes that came together to start the Great Depression. First, the prosperity of the 1920s was not shared by all, as wages did not rise as fast as productivity or corporate profits. Secondly, many people believed they could get rich quick by playing the market by buying stocks on credit from the banks. So when the market collapsed, many people and banks lost everything that had been invested or borrowed. Thirdly, low interest on credit caused people to buy more products on credit, which would lead them to default on their loans and eventually bank failures due to these defaults. Businesses also manufactured more products than the consumers could buy, therefore eventually causing cutbacks in those businesses. Farmers also never saw the prosperity of the 1920s due to the overproduction of food products that led to low prices and soil degradation that caused the Dust Bowl in the Great Plains. Import taxes on international products hurt trade with other countries and the production of our goods. The Federal Reserve also failed to help U.S. banks as they failed when people tried to withdraw their money from them. Lastly, the insistence on full loan repayments as the banking system failed contributed to the Depression spreading to other countries. As a result of the Great Depression, the value of all goods and services produced by the United States dropped by half in 4 years. 20% of all banks closed, wiping out $10 million of savings accounts. The amount of currency available in circulation also shrunk by 30%. Unemployment, excluding farmers, peaked at 25%, with some areas or regions having unemployment as high as 50%. All classes felt the effect of this depression.
If you have any questions, comments, concerns, or clarifications you would like to make about this lecture, please leave a comment below. If you learned something new, please consider leaving a like. If you would like to receive notifications of more content like this, please consider subscribing and ringing the notification bell. If you would like to support this channel and Creator financially, please check out the links in the description for merchandise or sites that will provide me direct financial support for the work of this channel. Thank you for your time and have a great day. Class dismissed.